Okay, excellent, excellent. All right, y'all. Appreciate everybody for being here. Uh, this is really great. I'm glad that we keeping this going after dang, it's been almost a year since we did uh the Brother Rich workshop, and we still going strong at it. I think that's something that we can definitely give ourselves a pat on the back for, that we haven't given up, and a lot of other people probably have just fallen off, but we still in this together. So I'm grateful for y'all for being in this.
Wow,
Yeah.
it's really been a year? It's been a year?
But I heard what you said, the Terraforce. Okay. Were you still going? Because I wanted you to finish that if you were. Mm. Okay. All right. All right. Hope everything's good with the audio. Just let me know. But yeah, I was just about to say I want to first get into some technical analysis, taking a look at some of the top coins, seeing how the market's looking. If you aren't aware, the markets have been very down, very, very much down in the last week or so. We were just at Bitcoin was at like 110,000 like last week. Now it's at hovering over 100,000, and we'll see if it'll go lower or not. So we're gonna take a look. I'm about to share my screen, and we can take a look at some stuff real quick. All right. Uh, okay. All right. Let me know if y'all can see this. Y'all can see this? What I'm looking at?
Yes, I
Give me
see it.
Yes.
Okay, okay, great, great. All right, so we are looking at. Let's go actually right here. No, not that one. That's a lot. Let's go to Bitcoin, right? So Bitcoin on the 1 day. I like this view on TradingView because it kind of tells you the 1 day, 1 week, 1 month. So on the 1 day, we're up 0.2%. Just kind of chop moving sideways a little bit. On the 1 week, as you can see, it's been pretty downwards, all the way up at 110 last week, down to 100. We got close. We literally touched 99,000 and came back up. I think that was 2 days ago. And on the 1 month, down 16% because it was all the way at 124,000 a month ago. So it just shows like where we're at. It's very interesting. But on the yearly scale, we're up 8%. You know what I'm saying? So if you held on since last year, you still up 8%. That's still good. That's still good. And then we look at the 5 years, of course. Since 2020, you're definitely good. You're definitely good. So all right, now we're gonna go to Ethereum. Let's check out Ethereum. Okay. Okay, we're gonna check out Ethereum. Ethereum. Normally, from my experience, like when Bitcoin has sharp downward moves, Ethereum and the altcoins have even sharper moves, just because how they say the market kind of follows Bitcoin, but they can react a lot stronger because Bitcoin is the first coin and just has a lot more time in the game and everything. But yeah, that's maybe something you could consider when you're trading. Like if Bitcoin is going to have a downwards move, or if it's going to have an upwards move, you can expect the altcoins like Ethereum or any other coins to potentially be multiplied higher, or lower. So looking at the 1 day, it's about the same as Bitcoin moving sideways. The 12 week, yep, about double, literally 12. I mean, the 1 week, it's about double, 12% downwards. Almost touched. I think it did touch 4,000, or it almost did. Yeah, it was very close to touching 4,000. So as y'all can see, that seems to be a resistance level, $4,000 on Oh, it did. Yeah, it did touch it. That was like a month ago, like a little more than a month ago. No, it was about 2 weeks ago. Yeah, we did get there, but it quickly came down, and then as you see, it hovered around that 4,000 area, but couldn't break back over it, and now we're down to 3,325 dollars, 25% down on the month. You know, definitely looking very red out here. But on the 6 month, it's still looking good. Still looking pretty good because if you would have got in with Ethereum at 20 in July, $2,200, you still will be up. That's not bad, you know. So it's just about perspective. It's really about perspective. Like on the 1 month, you could be looking very bad, but on the 6 month, you could be looking good. So all perspective, and I like being able to see those different versions. All right, one of my favorite altcoins, Aave. If you all use Instadap or any of the Aave protocols with the self banking, this is the native token for that, and I think it's a great investment. So it's like short term, in this week long period, but that's my that's my opinion. I would say anytime Aave is under $200, that's a great price. We'll see how low it can go, or if it will continue to go lower. But that is my opinion for sure. On the 6 month, so as you can see, the 6 month down, which is not as sharp as the 1 month. So it was at 246 6 months ago, but 1 month ago, the high was at around almost $300. But then on the year to date, down 35%. So yeah, Aave can run. Aave can run now, and we seeing it hit $370, and it's at 199 right now. So Aave can run. Its lowest point this year was $125. Now that is super steal. You know. Moving on, I like to look at the total crypto market. I think that's a great gauge to see where Bitcoin and where everything kind of is like together as a unit. So mostly moving sideways on the daily, down 7% on the weekly. Okay. So we can see what's the weekly resistance, around 3.6 trillion. How I see resistances or supports is base dominant. That's up on the 1 month. It's up 2.5%. Now as you would notice, the dominance charts don't move as sharply as the price charts because, as we know, crypto is very volatile. But since this is not really measuring the volatility of price, it's more registering the dominance over in comparison to other coins. It's not going to be as sharp. Like we only seeing 2.5% on the 1 month, 4.1% on the year to date. All 5 years only 6.9. So don't expect the percentages to be crazy, but it's still very very good insights for sure, for sure. So what here is looking like on the 1 month resistance is about 60. It kind of it's over 60, so we'll see how long it can hold that. Very interesting. On the 3 month, it's all the way at 65 about 3 months ago. It sharply came down from there. Year to date. Okay. The high was around 65%, but the low came down to like 56% dominance. But another dominance I like to look at is the others dominance. Now, this one is like your smaller market cap coins. For example, those would be Aave, Chainlink, AVAX, Sui, Hype. Like these will be the coins that are excluded from the top 10. And me personally, I kind of feel like we can make better gains off of the smaller market cap coins that are under the top 10. I'm not saying don't invest in the top 10 coins, but I would definitely look into these coins under the top 10 because a lot of them are great projects and I think can make much stronger returns in the height of the bull market compared to Bitcoin or compared to Ethereum. So I really like this dominance chart. This is probably one of my favorite dominance charts, to be honest. On the 1 day, it's actually moving up on the 1%, 2 week. Okay, on the 1 week, 2%. Now, if we look at this other's dominance, its percentages are looking much higher than Bitcoin, much higher. Probably because Bitcoin just has so much more volume in the market compared to this one. So it's a little bit more volatile. So, yep. Let's see. On the 6 months, down 17.93%. Seemed like it resisted around 8.32%. Year to date, 33%. So a year ago, when the Trump pump happened, it was 10%, 11% of the dominance of the market. We came all the way down at 7%. I feel like 7% is definitely another resistance level. If we can get past 7%, we can maybe start moving up. But I feel as though 7% is definitely a wall that we're gonna have to climb. So we will see what happens. And then I'll just briefly go over Chainlink, one of my favorite coins as well. Okay, let's look at it. The 6 month down 14%. So it had a nice high. 24 around $7 around August. That was around $24, $27 on the year. Ran up to around 26. So we can see this is only not even 6 months ago, and it was at $26. Now we're at 14. So if we just get even close to 26, that's almost doubling your money. And if you trade and you're average leverage, that could be way more. So these are great times. These are great times to be in the market, in my opinion. Very great times. Next we got AVAX. AVAX has been getting I'm not gonna lie. AVAX has been getting destroyed on the market. Like, I don't know why. I was thinking maybe is it because their logo is red and it's like because their logo is red, they're just bound to, when the markets are red, really dip. I don't know, but AVAX has been getting hit hard, like 41% in 1 month. That is a lot. That is a lot. 30. Yeah, AVAX was up $30. Now it's at 16. That's almost half in 1 month. But you can also make money on the short side as well. If you would have predicted that, this is not a sustainable run up, you put a short position a month ago, you would be looking very, very nice, and it doesn't seem like the trend has ended. We just constantly seeing lower lows and lower lows and lower lows in 1 month. And even the past 6 months, you see 30, there's lower lows and lower lows and lower lows. So this trend has not ended. You know what I'm saying? There's a quote that says, follow the trend until it ends. And this trend is still going down. We're like, how long? How long can it go? I don't know. We're just going to have to wait and see. Just going to have to wait and see. And then Ethereum dominance. We're almost done with this section. Ethereum dominance, 12%. Okay. So go on to 1 month. Looks like resistance is around 13. Okay. High was around 15%. All right. Looking at XRP. It's down in 1 month. It's down 22%. From $3 down to $2.21. Right. But in 1 year, or from the year before, like, it was at 50 cents. So had a crazy run up. We'll see what happens with there, but it's definitely looking like This $2 area is a little bit of a support, but we'll see if we break that as well. Solana, $156. I don't know, 1 month. Yep, yep. 28% down on the 1 month. Looks like it basically traded sideways, trying to get over $200, but couldn't do it. And now we're down to 156. And on the 6 month, had a high up to 240, 250. But yep, now we're down to 156. I'm gonna look at Cardano, and that will be my last one. And then I'll open it up if anybody else wants to take a quick look at a coin or something like that. Just shout it out. But we're gonna look at Cardano real quick. On the 1 month, it's all the way up almost at 90 cents. Now it's at 53. Let's see what it's looking like on the 6 month. Yeah, so about high was literally $1. Absolute high was about $1. So seems like a 6 month resistance, about $1. A support maybe around 53 cents. Basically, right now is about a support. So yeah, we definitely at the lowest of the lows. But as you can see, well, on the year to date, it's also kind of having a downward trend as well. So most of these trends are red. Like Cardano, a lot of these trends are red. And, instead of trying to time the absolute bottom, sometimes you just got to go with the trend and see what happens, and wait for it to reverse and go green again, until you can expect something. But, because none of us have a crystal ball. We don't know what's going to happen. But we do know that if we look in the past, we can see that this coin is continuously going down, and that is a trend. And that's all we can really go off of. So, yeah, that's the quick technical analysis of the top coins with some of my favorite coins in the dominance charts. Does anybody have a coin that they would like for me to pull up real quick that they would like to check out? Just let me know. Let me know.
Hey, how are you?
Peace. I'm doing well. How about yourself?
I'm doing pretty well. I want to know if you could do Virtual's protocol real quick.
Okay, cool. Virtuals. Let's check that out. Hold on, actually search it up here. Virtuals. I haven't. Yeah, Virtuals was definitely pretty hyped up like earlier in the year. But I haven't heard about it as much. I'm not saying it's a bad coin or nothing. It just it had a lot of hype like earlier in the year.
Right, and I
So
feel like you don't hear, literally like you saying, you don't hear anything about it anymore. It
yeah,
rallied up
but
to that $5 mark, and then now since it went back down to like $1, pretty much, it's quiet.
right. Yeah, but it's at 74 on the ranks, which is still good. I'm not gonna lie. Like anything in the top 100, I think that's still pretty solid. I don't think it's just gonna fall off the face of the earth. But as long as, in my opinion, it stays in that top 100, I think it's still good. I think it's still good. But if we're looking at it on the 1 week, was at $1.80, down 4%. Now down to $1.19. In the 1 month, it was all the way down to, that was probably when that large crypto crash happened on October 10th. It was at 70 cents. Had a nice little run up. But in the past 6 months, it was all the way at $2.36. And then on the year to date, let's look at the 1 year. Yeah, that was what you were talking about, that run up all the way to $4.50. Just had a huge peak. It looks like a little Head and Shoulders right there, huge peak, and fell off from there. had a low of 48 cent and ran up again, and yeah, yeah. So if I were to guess, or not guess, look at see where support and the resistance would be, I would say basically, well, the bottom support would be around 50 cent, around 70 to 50 cent. Maybe on the top side, and this is on the one year, around $1.50 or so, as a low resistance, maybe even up to $2. So yeah, I would say, if we can get up to $2, past $2 again, we could definitely see some moves. But honestly, until, in my opinion, how I'm looking at it, because I'm actually looking at it on the 6 month now. If we can't get past $2, then it's looking like this trend is going to continue staying red. If we can't get past $2, so that's how I'm looking at virtuals. What do you think about that? For the woman who asked.
That looks about right on my end as well.
Mhm.
One thing I can say I appreciate about technical analysis, it really literally makes you just analyze and not put any emotion into anything.
Mhm.
And literally looking at the chart on the 6 month, you can see how it keeps downtrending.
Mhm. The peaks are
So,
getting lower.
right, exactly.
Mhm. Mhm. Yep. Yep. But if you were to have held it for 1 year, that wouldn't matter because you'd be good. You got in at 38 cents, so no, it really wouldn't matter. But like you said, the 6 month perspective though, so that's what it depends on the perspective you're looking at. So yeah, thank you for that. Thank you for that virtuals tap in. So pay attention. Anybody who wants to invest in virtuals, if you want to see maybe when the trend might change, look at pay like maybe set an alert on your phone for $2. Set an alert for $2. When it gets over $2, you're like, okay, maybe it's time. It's go time for virtuals again. But until then, yeah, still looking down. All right. Anybody else have a coin they would like to check out? Okay. Nobody. Okay, also all good. I did want to show y'all one thing real quick with Bitcoin. This is just my personal technical analysis, and I'm gonna pass it off to Jada. I apologize, Zarena. Okay, we gonna go with the name on there. So yeah, we gonna check that out. Okay. So, I know this looks like a lot, but I like to do trend lines on the RSI, and I just want to share with y'all something when it comes to Bitcoin. So I was earlier, basically, and this is on the 1 day chart. I was basically seeing $100,001 as like a strong support, but as we see, Bitcoin has dropped very well below that. Already touched 99,000, and even though it was quick. Like it wasn't like it's like deep under $101,882. I still think that matters. You know what I'm saying? So, in my opinion, I think that just because we couldn't hold for a few days, like we couldn't, in my opinion, like since we went under that $101,882 for literally 3 days straight, that does still leave the door open for 96,000 to come in. And if you look at this trend line up here that I drew from all the way from god dang November, this purple trend line, it's hitting. So trend lines, if you don't know, is literally just when one point touches another point. It could just be 2 points, but I like to do trend lines where multiple points hit. So we got 1, 2, 3, 4, 5, 6, 7, 8. So we got this purple line hitting basically eight points on the trend line. It's looking like we could have a little bit of a move back down. I mean, maybe we could bounce from here and keep going up, but if this RSI follows this purple trend line, we still got some room to go. We still got some room to go down. And if we look at this MACD right here, moving average convergence, I think that's what it means. Moving average convergence divergence. Yep. This red, it just started. So it's like, and if you look in the past, normally on the daily chart, it can be quick. Like it might be quick, like right here, just a few days. But normally, on average, the red, when it goes into the red, it's there. Yeah, it looks just like this. It's no KYC, which is great. If y'all don't know what KYC means, it means know your customer. And this is know your customer. So I don't have to submit my driver's license, my address, nothing. I just need a wallet and that's it. That's where we want to be. We want to be on these platforms. And they pretty much have everything. They got all the coins. They got Bitcoin. They got the altcoins. They even got gold. And I think they have Forex as well. So you can do a lot with it. I really like it. And I actually can trade on my phone through the Rabby Wallet browser. So it's very cool. Very cool. And then let me just explain the support and the resistance really fast. So I got a bunch of stuff. Let me go to another chart that doesn't have a bunch of stuff, just so you can understand what the support and resistance is. Okay. So support and resistance is literally, basically, it's kind of similar to trend lines where it's like where you notice multiple, see, I'm working on my TradingView tools. I'm working on them. I'm not the best with them. Where you notice that that price kind of intersects multiple times. So right there, I just clicked right here where it looked like a support. That $110,000 area definitely looks like a support. We got it hidden. This is in May. We got it hidden right in May, in June, in September, end of September, at the top of November. Like it hit it multiple times. But as you can notice, in some points it was a resistance. At some points it was a support. So right here in June, it was a resistance because it hit the point and then came down. It hit the point and then came down. It hit the point, but then resistance flipped into support. So when it goes over it, that's where it's now going to be support. It almost touched it again, and then now it's support. So we see back here, it was resistance. Right here, it's now support. It's support again. It's support again. It's somewhat support again, but now it's dropped below it. So now this $110,000 is now resistance. So that is the simple breakdown of how support and resistance are. Like I said, it's kind of similar to trend lines. It's just trend lines are more diagonal, whereas support and resistance is just more horizontal, So yeah, that's support and resistance. One of the best indicators on any technical analysis. Like that's like the fundamentals right there. Understanding support and resistance, you could do a lot with that. Yeah, really, you could do a whole lot with just understanding that one concept alone. Like me personally, I would pull up, if you want to practice, I'll just pull up a chart, blank chart, and just start drawing the lines out. Like just drawing them out. Where do I think is another support and resistance? Just drawing them out, literally. Like right there. That looks like one. That's 70,000. That looks like a support resistance, you know, because it hit it one, two, three, four, five, 6 times. Anything that hits more 3 times or more, even 2 times, but 3 times especially or more, most likely a support and or resistance. But yeah, yeah. So I'm gonna pass it off. I'm gonna pass it off. Hope that answered the question. Yep, yep. Cool, cool. I'm glad I could help with that. Okay, I'm going to stop sharing now and pass it off. Appreciate it. Is crypto? This is all right now. Oh, okay, okay, cool. She ain't here. How'd I do, by the way? Y'all let me know. How was that? This is my first time hosting like this.
You did great.
Yeah, you
Thank you.
did good.
Awesome, Quay. You did awesome.
Thank you so much. Thank you.
How often you finna be doing this?
What's up, brother? Yes, sir. So we want to do this every full moon. You know, once a month around the full moon. Is I think the full moon was tonight, or I mean, if we can look outside, the moon is very bright. So we
Yes,
want
the
to do
moon
this.
the moon is huge. It
Yeah.
is standing out like wow. It's beautiful. If you guys haven't been out there, it's beautiful.
Yes, yes. I was outside last night. It felt like a flashlight was over my house.
Yes, it was.
It's so crazy.
Yes. 4
Yeah.
nights in a row we've had a full moon. 4 nights.
Dang. Yeah. Yeah. So, and you know, there is a psychology to full moon trading where basically during the full moon, the prices are normally low because people are highly emotional and they're panic
Mm,
selling. But during the
mm.
new moon, people are more cautious and they're better with their money.
Uh-oh.
My bad, I went out. My bad.
It got muted.
Yes, yes, yes. Okay, so during the full moon, prices are normally low, and I think it's a great idea for us to do the calls during the full moon because we could potentially find great buying opportunities during like in real time. You know what I'm saying? During our meetings. So for moving forward, we will be doing this every full moon, or at least a day or two before the full moon. Yep.
Yeah, I appreciate that, bro. For sure, man.
No doubt. I'm glad to see you here, man.
So, from last time, what are you guys looking at, or um, I guess like what networks are you on? Like what coins? What are your bags? Anybody?
I mean, AVAX bouncing for AVAX and Link for me for sure,
Okay,
and Aave.
okay. There was this good Aave link pool on Arbitrum. It was done like 60, 65% and a pretty full range because they kind of chop. You should check that out. I'll see if it's still printing like that and try to send it to you.
Oh yes, please do. Thank you, thank you.
Um, one of the things I was thinking about when you were looking at the charts, I don't have let me see. This is just a regular Bitcoin chart, but I don't have the all the markings you have on your RSI. But that trend line you were showing from November down here, I feel like that's also because like from a dominance perspective, we're kind of getting to the point where in the market is about to be altcoin market. You know what I mean? So that could also be possibly why you're seeing the RSI just on Bitcoin like hit that trend line so much and kind of look like it's gonna go lower.
Mm. Okay. Okay. Yeah. Okay.
You can kind
And
of
the
see it here,
Bitcoin.
but I don't have that trend line.
Okay. Is that blue? That's RSI. The blue down
Yeah,
there.
let's
Okay. Okay. Yeah. It's basically yeah. It's you can see it like even if you don't draw it. That peak from that peak all the way
yeah,
down. It's
just
downward trend.
do that real quick, kind of rough, something like that,
Yeah.
essentially.
Yeah.
But yeah, that's kind of my thought when I saw that.
Hmm. Okay.
But
Yeah.
I mostly just been looking at Dixie, which is the dollar index. It's a basket of currencies. It happened during Brentwoods. Um, if you guys learned about that in history, but basically it's like the euro, the yen. It's like 5 or 6 different currencies put together, but Dixie up, Dixie down, dollar down. Essentially, is what this means. And in the greater scheme, what this means for us. Let me kind of get rid of some of this. Really, what I was just looking at is it's really pinned between this like 101 and 96. We go sub 96, that's when things start to get fun for us in crypto. Let's see, do I have? Let's just do this. Like maybe like a bounce here, you know? It's not pretty, but something like that is essentially what I'm looking like. Ooh, let's try it again. But basically, like hits 101, comes down, might go back up, or it might just, go under 96. But a lot of people have been, well, I don't know, the market, there's a lot of fear in the market basically. But I think a lot of people just were in a lot of alts and there's a lot of leverage. And if you didn't have a lot of leverage and you have some Bitcoin in your position and you have a good cash position, I don't think, you know, you were down so terribly. Um, but yeah, essentially looking for this to come down below 96, which is, you can kind of see, we're looking at a weekly too, but you can see it
Real quick.
corresponds.
Could
Yeah.
you explain leverage for the people who don't know what leverage is?
Yeah, leverage is if I have $1, I can go to, like you just showed, Gains Network, and they'll give me 3x whatever I bring to the table. So if I have $1, they'll give me the ability to trade like I have $3, right? Which basically means if it goes up more, I make more, but if it goes down more, I make less. You know what I'm saying? You get hurt by leverage as well. So leverage works both ways. So you'll make more, but you'll also lose more. That's kind of the basics of leverage. And in this market, there's like platforms. I'm not sure it gains how high they go, but there's platforms where you can get 100x leverage. So like if you use Hyperliquid, they have pretty high leverage over there too. So it just makes it even worse if there is a market downturn and there's a bunch of longs, but the market goes down instead of going up like everybody bet, and they're like 30x leverage. Well, they only had $1, but they're betting like they have 30. So it's just like a capitulation event. It just catapults. It's like a snowball. One person gets liquidated, then more people get liquidated. And yeah, that's why you gotta be careful with leverage. That also works like if you're on Aave and you have like 1,000 ETH, or you have like 1 ETH and you borrow some USDC against it, and say you did like a 60% LTV, so that means you took out 60% of your money and you left 40% there. You could kind of get hurt in the downturn if depending upon what your liquidation price is, because you don't have enough collateral to cover your debt. So they would have to sell a portion of your collateral to cover your debt. So, it could work if you're trading or if you're doing that kind of leverage. But yeah, the main thing about this is, like I said, a lot of people trying to figure out when the bull market is. You can kind of see like when. So this right here was February, right? This was when the market was really about to just start going to crap. Then you can see down here, we kind of bounced, and we just been chopping for the last few months. And like I said, we get below 96, like you can see here, 2021, sub 96. I can actually, oh wait, that's the wrong thing. I always forget how to do this. There it is. And just kind of see them together. Try to line it up. But if you look, okay, that's kind of lined up. But if you look when it goes sub 96 in the crypto market, right? Bull market. So that's what we're looking for. To get this pump action that we saw here, we need sub 96. Until then, it's all pretty much noise, honestly. It's just the same money moving around. You can see the same thing in 2018. There wasn't really an altcoin market then, but you can still kind of match it up.
So that 96 is the support.
I mean, yeah, exactly.
Okay.
It's act like, so if we see where we are here, right now 96 is acting as serious support, right? 1 touch, 2 touch. So let me just get rid of all this other crap. So what we're looking for is it might pop back up in this range and then come back down to 96. And do we go down or do we go up? That's kind of what we're looking for. But really just going sub 96. And if you guys don't know, like, this is just from a macro perspective. Like, this is what makes markets do what they do. For the most part, like, a lot of what we've seen is mostly, I call it the Trump pump. I think they just pumped a shit ton of money in the market, honestly. And then you had the Chinese who printed like a few trillion, I think, in September 2024, which was, if we look here, January 2024, right? So this was this month. And then we had that fat candle in November, right? Everybody remember that? So they printed their money here, and then we pumped, and then with Trump as well. And so it actually kind of looks good on the monthly. But yeah, just maybe it'll come down, bounce. This is like the 20. But we just need more money in the market, more liquidity, less tighter conditions from a global macro perspective. Because this is an emerging market that is global. It's not just the US, it's global. So if money is tight here, money is tight in China, money is tight in Russia, money is tight in Nigeria, wherever, then money's going to be tight in this market as well.
It also looked like when the Dixie went under 96, that was when COVID happened.
Yeah.
Yeah. So it's like, is it going to take an event like COVID to push under 96, maybe.
Yeah. And something a lot of people should look into is what happened in September of 2019 before the Wuhan flu was released or whatever happened with that. Um, the Fed repo crisis of 2019 in September. So I say that to say that the Federal Reserve, the fiscal and monetary situation in this country has always been a rocky road. This isn't nothing new. You know what I'm saying? It's nothing new. But at the end of the day, this monetary and fiscal system is what allows them to finance or incentivize people to work, for them to incentivize social stability, essentially. So unless they get the economy together, we'll see more social unrest. So it's in their best interest to get the economy together so that they can have, good cogs in the machine. The other thing macro is like, um, they're supposed to start QE and probably cut some more rates. Also, Brenner cycle says 2026. So I've been kind of going with 2026 as my framework anyway, mostly because of the election and the Brenner cycle.
Which election in 2026?
The midterms here in this country.
Oh, okay.
But can y'all see that? So this middle line, oh wait, shit, ClickFunnels. This middle line, you can see years of good times, high prices, when to sell stocks in all values and values of all kind. So 2026. And you can see it obviously marked the bottom, which is 2023. Is everything super exact? It's pretty damn close. You got 2027. You got, 2007 here, right? Great year to sell. 2012, that's when we know the market really capitulated. I was basically a child then, so I don't really know too much about it, but what I read. 2016, when Trump was in first election, I remember that market was good. So I kind of use this as my framework for long term. But yeah, what was some other stuff I was looking at? Obviously, gold's looking great. Let's look at Bitcoin Gold. So these lines I drew were basically support and resistance. And it's still holding it. I basically just feel like it's just gonna let's see, where's the just pop until we get super explosion that way, which is when Bitcoin is absolutely smothering gold to death. Because if you look at it from this perspective, of these support and resistance lines I drew, gold hasn't really broken out much. Bitcoin from a gold perspective, right? From 2021. It went just a touch higher. Let's see what that is. So about 13% higher than it did in 2021. It's not a lot. Maybe in gold standards, but still not a lot. Expecting Bitcoin to still rip. Like a lot of people think I don't know, 25 or whatever was the top. I'm not sure about that though. But we'll see. But I will say this: people who are calling for like 300 and numbers like that, it goes against the law of diminishing returns, which basically means that Bitcoin is going to have less and less returns over time. So if it does do that, then it breaks that law, which is fine by me. But that law has been kind of in effect so far. The other thing I want to say is the reason why I always look at the Dixie is because a lot of people talk about the Bitcoin halving cycle, 4-year cycle, but really it's just a business cycle. If you look at is it ISM? I can't remember that ticker, but there's like a ticker that you can look at, and it'll show you the global business cycle, and where we are in that isn't even the expansion period. So basically, every time there's like a Bitcoin, like the people who made Bitcoin essentially were smart and they knew about the global economic macro cycle, the debt cycle, and all that type of stuff. So when it came out in 2008, they essentially knew that it would coincide with monetary periods of expansion. So it's not a Bitcoin halving cycle. It's just Bitcoin goes along with the macro global cycle.
Can I also add something?
Yeah.
They also aligned it with the Chinese zodiac, with Bitcoin starting in the year of the rat, which is the
Yeah.
first sign in the Chinese zodiac. And Satoshi Nakamoto is like an Asian name, so feels a little like they knew what they was doing.
Yeah, exactly. That's another one. So this is the business cycle. You can see I got one line on this chart, 51. You could just go back throughout how long this chart goes. It goes. But and you can see when it's below that line, right? That was COVID. That was not good, right? We all lived through that. We remember that? Not good. Okay. Also down. We've been down this entire time. Like I said, how it marked the bottom in 2023. And it was interesting that we hit this in January 25, and that was basically a, a pretty good top on a lot of coins in the market generally, outside of Bitcoin, really. So, looking for another pop up here and for it to finally overtake this. Again, you can match this up with Bitcoin chart or total crypto market cap, whatever. And you can see when this goes up, we're in bull market, goes down, bear market. So, not a Bitcoin halving cycle, it's just a business cycle, global liquidity cycle.
And what is this chart called? That seems very interesting.
Uh, this one is
Yes.
ISM. It's the United States Purchasing Managers Index, which basically just it takes in a lot of stuff, has to do with supply, and it's kind of a rough way to see basically the where we are in the business cycle. Um, but a few things I did want to touch on is if you have used Meteor, make sure you check for your airdrop. Okay, they are doing either claim the airdrop tokens, or you can lock the basically what would be your allocated portion of the tokens in the liquidity pool, and you just earn the fees. But your tokens will be locked, and you'll get an NFT um instead of the tokens. You can go here, and do all your checker. Actually, yeah, let's look at the allocation really quick. Oh, that's to check my wallet. But yeah, this is what I just wanted to show you. The launch pool is you can either claim it inside the launch pool and earn fees, or you can just claim your token straight out and do whatever you want to do with them. So if any of you guys have used Meteora, you should definitely go check all your wallets.
I have not used Meteor. What exactly? Oh, it's just okay. Liquidity pools. Really.
Yeah, it's just a DEX on Solana. Are any of you guys on Solana, or are you guys on mainly like AVAX or like EVM?
Yeah, the main chains are EVM, Ethereum, Solana, Bitcoin, XRP. You know, I guess that's a chain as well. Yeah. So okay.
But yeah, just if you guys are on Solana, check it out, and you have used it. But if you mostly use Orca and Radium, I would still definitely tell you to check this out. What they do is a bit different. They do dynamic liquidity versus basically just putting your money in one tick. It goes into a bin, and you can also create the shape. Let me see if I can just show you guys real quick. So you can either evenly distribute it across, or you can kind of distribute more one way or another, right? So me personally, I do like these type of decks is better than just the straight uni style. But you know they serve different purposes. So
Do you need a VPN for Meteor?
no, to claim airdrop, I would always tell you to use a VPN though if you're doing to check your allocations or to see if you're gonna get it, because I don't mess around.
That's right. That's right.
I missed out on Hyperliquid due to not clicking the terms and conditions in time or whatever. So, and then even if I didn't have my VPN on, then I would have got that wallet blacklisted and wouldn't been able to claim anyway. So just always claim in a VPN. You want to be in Mexico, Thailand, anywhere else but here. But yeah, so I kind of just wanted to open up, see what from like Quick who opened up with, we're like essentially 1 year from the original class that brought us all together. Um, so I kind of wanted to see what had you guys done from the class, which was, self-banking, using Aave, um, liquidity pools. Um, I believe he also showed I forgot what the dex is on XRPL. But yeah, if any of you guys wanna, share with the group what have you guys done since then, even if it was just buy more Bitcoin or whatever. But what have you guys done in the year since the class?
I think I've done a couple of things actually. The XP market is the XRP network that people have been using, and I actually tapped into their liquidity pool and put some capital there. And then every day I make sure that I claim my rewards with the XP market, and it just gives you kind of more XRP. So even just literally clicking every day, I think I have extra like 4 XRP, which I wouldn't have had if I didn't even know this existed. Um, I've actually tapped into some of my retirement investment, and I've transferred it over. My goal is to eventually take all of my retirement investment to actually self bank it myself. So build that capital myself, because I already see the change in doing it myself rather than have it being done for me through my job. Um, I also have discharged debt. I've paid bills off of discharging debt. Um, I'm trying to look at everything that I have in front of me. I actually got a just this laptop that I'm using right now is straight for crypto. I actually purposely right after the class purchased a laptop just for crypto, so nothing else could interfere or deal with anything that's going on with this laptop. Um, yeah, that's it's not pretty much it, but I'm trying to look at everything. Oh, I tried to tap into Fabrica, but it wasn't working for me. And there was another protocol that somebody had placed in one of the groups called Vesta Equity. So I could tap into my equity, but through the blockchain. And when I actually had a conversation with them like about a week ago, they were telling me that they're only located in California, but their goal in the next 6 months is to actually be located throughout the whole 50. Um, and to be able to then do that and leverage that fund to basically pour back into the crypto space. So that's one of the biggest projects that I kind of want to tap into so I could diversify my portfolio in the crypto space.
Thank you for sharing. Abundance 444. I believe that was you speaking. Um, you mentioned a lot of things, so I kind of just want to go down. You said, you got in with XP Marketplace. It's actually great that you were doing that every day and claiming. Because when I first started, I was like, I wasn't claiming, so I had missed some XP tokens that they give you because I wasn't claiming every day. It was actually one of the reasons why I had stopped using it, but I had to just get back in the habit of claiming it every day. Um, as well as you said, something I think that was really important was, um, instead of having your money in a locked retirement account that's adding more AUM, assets under management, for, I don't know, whoever your custodian was, Fidelity or whoever, who had your retirement accounts. Instead of giving them more AUM, you're adding that to your family's wealth, to your estate, to your wealth. So it's in your custody, in your control, and you can really monetize it properly. You know what I mean? And really be hands on and know what you're getting out of it. So that's really important.
Thank you.
Yeah. I just wanted to definitely say that because uh I'm pretty young, so I never actually had like a real 401k type of job. So I never had those type of accounts. But for people my age, I always tell them, I'm like, why are you contributing to these? Like a 401k is cool if you get the match, do up to your match. That's free money. But, IRA, why custody it over there when you can custody it yourself? And, crypto is property. So when people talk about the taxation and stuff like that, it's really not that bad if you know what you're doing. Um, you know, because I know the Roth IRA, you pay your taxes up front, and then once you get the money, I think when you're like 65, it's no tax. But you can set up a situation like that with your own trust, because that's all that they're doing, and they're using Fidelity as your custodian. You know what I'm saying? You could do that yourself. So, it's great that you're starting to get that self custody and getting comfortable with being on chain and having your money on chain. But is anybody else who wants to share?
I see in the comments we got people saying they've been purchasing more Bitcoin. Excellent. Um,
Oh, okay, I didn't check the comments.
yeah, just been buying. Yep. That's
Yep,
good.
nothing wrong with just purchasing more Bitcoin. Honestly, I'll tell you this. Another reason why I think a lot of people are so scared, or not scared, but there's so much fear, is because a lot of people are underexposed in Bitcoin. A lot of people are very underexposed in Bitcoin. Um, because you got to think, if you're all in alts, especially, certain alts, you may be just sitting, especially if you're not in an LP or something, you're not earning, you may just be sitting, you know, not at great levels right now. So having Bitcoin in your portfolio, could definitely help ease the pressure. And something else I want to say, when it comes to self custody and controlling your money and, things of that nature, is before people put their money in banks, they put their money in life insurance. And you should all look up, your state's life insurance guarantee fund, see how much they got in there, because they insure the life insurance people. So just like how your bank can be FDIC insured, your life insurance can be insured. So I just want to put that out there as well, because a lot of people underestimate life insurance. It has insurance itself. And, you know, it's similar to like putting money in Aave, because if I put some money in a life insurance policy, it can be collateralizable, like the cash value I can pull from it, as well as it's an asset that I can go to a bank and I can say, hey, I have this policy, loan me X amount of money. So, just another way just to get your money outside of the traditional world of somebody else custodying your money. As well as having gold in the portfolio and silver, because we all see what that did. We all see what that did.
That's what's up. I would also suggest a good way to expose yourself to more Bitcoin is Cash App Bitcoin Roundups. I'm sure everybody here has a Cash App account, most of you probably. And if you have the Cash App card, you can just go to the app where it says Bitcoin and do Bitcoin Roundups. I've been doing Bitcoin Roundups for at least 2 years, and I'm probably doing $3 a week on just spending money. You know what I'm saying? And I'm like, that stuff adds up. It really does. So that's a great way to get, like she was saying, more exposure to Bitcoin and not just rely on these alts, because like with these alts, it's like they're gonna have a good season for sure, but that season might only come every 2 years or so. And it's like the you gotta time it perfectly, and you gotta be watching the chart to make sure you catch it. And if you don't catch it, you have to wait another 2 years or whatever. It's like it can be tricky unless you just really believe in that alt and you're like, I'm in it forever. You know what I'm saying? If you're trying to make some money, like, Bitcoin is definitely stood the test of time. That's just kind of how the data's shown. But I would definitely suggest the roundups. Definitely suggest the roundups. If you have a Cash App card, just do it immediately. Do them roundups. And I see Truth Seeking Luke. Definitely tap in with that, bro. hmm and also, I'll share what I've done this year. I have utilized my Aave portfolio to issue myself out basically my own line of business credit so that I could buy wholesale supplies for my business, which definitely helped me a lot because I didn't have to rely on uh, like another company to approve me. I was basically able to just get access to the capital immediately, but I'm also not spending my money, and I could still appreciate on it potentially as the prices go up, or I could just keep it in stablecoin as prices go down. So that's definitely been a game changer for me, and I'm still profiting off of those moves as we speak. So yeah, that's been amazing. I've also been dibbling and dabbling in some liquidity pools with the Avalanche network. I really like the Avalanche network. The main DEX for Avalanche is called LFJ.GG, and it's just a great way because I'm personally gonna hold Avalanche for the long term. So I'm like, if I'm gonna hold it, I might as well drop it in a liquidity pool and just see where it goes. So that's definitely something I've been utilizing. Uh, XP market, I was in there, but I am going to be honest, I did take it out to invest more into my Aave account because at one point my liquidation rate got very low. So I took it out to get it to help that out. And was that a good idea? I mean, maybe yes or no, but it's all learning. It's all a learning process. I've taken a lot of lessons. I'm not going to say L's, taken a lot of lessons that have gotten me to where I am today, where I could uh, just have more of less emotion when it comes to how I look at the charts and how I look at this market in particular. So my technical analysis has gotten very strong. I've also been using the Gains trade platform just to play with leverage a little bit. I of course have done some 30x leverage stuff, but normally I try to keep it very low. But I've also been using AI as a trading journal, which has been very, very, very helpful. I'm using the DeepSeek AI because if you do start to trade. I'm not going to say trading is not for everybody. Technically, though, everything is a trade. Anytime you buy Bitcoin, that's a trade. You're trading your cash for Bitcoin. So really, everything's a trade. But if you get into day trading or consistent trading, I would highly encourage you to log it into your AI and tell it exactly why are you making this trade. The three things you need to know is, I think it's two. When you're making a trade, is what is the price that I am? Why am I buying it at this price? Where am I willing to take my profit at? And where am I willing to get out of this position if it goes against what I think it's going to do? You can honestly do that with investing also. I mean, unless you just plan to just hold it for the end of time. But those are just three questions you could just ask yourself. That would be a great way to just mentally prepare yourself for this space. Why am I buying this coin right now? What price am I preparing to take my profits? And then what price am I willing to exit my position if it goes against my prediction? You know what I'm saying? So yeah, that's another thing that I've been doing. And yeah, I think that kind of sums it up. But I know there's so much more for me to tap into. So, and I'm grateful to have this community where we can do this together. So yeah, I see somebody saying
Yeah.
polymorph.
I
Polymorph.
I know
I
you
have not.
mentioned LFJ real quick. I just wanted
Mm-hmm.
to point out that reason why I personally use LFJ over Uniswap on AVAX is dynamic fee tier. So what that means is this little 0.05% you see next to that, right? That's how much the fee is on that pool when people swap. But LFJ has a dynamic fee tier algorithm essentially, where if the market gets really hot, it will juice up the fee tier so you make more. And then, the flip side, if the market gets really slow, that way, you're still making money, but it incentivizes more people to trade over here when the market is lower. Um, versus Uniswap, I can kind of just show you real quick. Uniswap, you got to choose a fee tier, which is honestly bothersome to me. I'm used to Curve. I like LFJ. These have dynamics. Excuse me, dynamic fee tiers, meaning it just has an algorithm that changes it for you to make more money whenever given the market conditions versus you just picking one fee tier and that's what you're stuck in. So just to show you really quick, you can see on here that's the fee tier, and that's just going to be the fee tier. There is no dynamicness to it. That's just going to be that fee tier for that pool. But you'll notice is there's all these different, like if we just sort by fee tier, there's just all these different fee tiers. It's just a bunch of them. Versus just on here, there's just one pool because it just has a dynamic fee. So hopefully I explained that in a way that made sense. Also, if you are going to LP over here, try to go to has rewards so you can get some of these AVAX rewards that they're giving out. It'll make your LP more profitable. Oh, also I wanted to show you guys this. So this, let me move that. So this is probably one of the best things. Besides the burner cycle, this is like the two things I have printed out is this and the burner cycle, like on my wall. So basically, you know how everybody's always like, it's time in the market, not timing the market, right? Blah blah blah, right? So what does that really mean? What it means is If you miss the 10 best days in the market, right? You went from making 64,000 to 29, almost 30,000. So that's a serious discrepancy in how much you make, right? And this is starting with 10K. If you miss, let's go down here, the 50 best days in the market, you actually lost money. You actually lost money, right? So my point in showing you this is based on the math. It's better to just buy Bitcoin today, buy gold today, buy the asset today, than to keep on praying and hoping and waiting for a better dip. Just keep buying, because the longer you're in the market, the better your gains are. And this is especially true for liquidity pools, because not even just liquidity pools, but liquidity pools like something like VE Curve or VE Arrow or VE Velo, um, where it's volume based. Because if you miss, again, the 10 best days for volume on your pair, you just missed 80% of the money for the year. Okay? It's kind of equivalent to like like food truck festivals and stuff like that. Like if you have a food truck festival in your city and you miss it, that might been like your best day in the entire year, but you missed that day and you missed out on like a 50K day. Just that one day could have changed your situation. You know what I'm saying? So it's the same thing. You want to be in the market on those best days. And when can we predict the best days? We can't. That's why you just got to be in the market. And
To
again,
add
this is
on,
just based on the math.
yeah, I was just gonna add in, like, you're definitely right. We cannot predict the best days. In my opinion, though, I will say the only thing from what I've seen, if anyone else has more knowledge, let me know. But something that could influence better days or worse days might be moon cycles. Because when we look at the moon, it is a large gravitational force that is on our planet. And it affects our tides, it affects their emotions, it affects crime rates, hospital rates, and all that. Why? How come it doesn't affect the market? But that's just a supernatural force right there, the moon. So take that how y'all want, but even still, it's not 100% accurate. But still, best way. Like I would say, definitely buy Bitcoin every day. But if you potentially want to look for great times to buy in, maybe put a little $5 more in when it's the full moon. You know what I'm saying? Because prices might be a little lower. So that's just my 2 cents to share with that. But that's because the moon is literally just a huge gravitational celestial object.
Hmm. I would definitely agree with that. I would use the moon cycle along with moving averages to make it more to have a higher probability of being correct. Um yeah, but yeah, just buying extra on the dip, whether that's a full moon dip as we can see here, right? Boom boom, two of them. Or if that's just buying extra whenever it comes down near the 20-week moving average, right? But just buying extra on the dip is going to take you further, of course. And definitely something you should add, if you're just dollar cost averaging into Bitcoin. Something I use for like if I'm earning an LP, uh let me actually see if I can find that LP I was telling you about
Oh,
quickly
yeah,
while I'm on
the
here.
one with the
But
yeah. Mhm.
yeah, um if I'm earning in an LP and I'm earning say Aave and ETH or WETH, which is just wrap ETH, right? But I kind of want to actually add to my native Bitcoin stack. I just go to GardenFi. Is it GardenFi? I always forget what that shit is called. Give me 1 second. I always go back to Twitter. That's where I bookmark everything. Maybe I didn't bookmark it. Let me see real quick. Oh, it's just Garden Finance. Okay. Ooh, they're actually under maintenance. That's interesting. I was just on here the other day. But anyway, I use them from time to time to just get native Bitcoin. Some of the best swap rates I've seen on just getting native Bitcoin. But you can use any exchange you like. I just happen to use them. They were built to that's literally what that exchange was built to do, was just like you can see what it says right here. Trustless peer-to-peer bridge, Bitcoin bridge. But yeah, let me see if I can find that LP though. I think it was on Arbitrum. Pendle. Also, I just want to say this too. If you are like bullish certain tokens, like Kwaku was saying, like if you're just sitting in alts, you're just waiting. You know, a good thing to do is just throw them in an LP, especially especially something that ranges really good against ETH, or even if you put in like a USDC pool and you kind of like if you go heavy on the bottom range, which we're kind of like say closer to where we're spot price right now, and then you know you just kind of chill there, and as the market starts to pick up, you're gonna essentially be laddering out or dollar cost averaging out into stable coins. So you're essentially just selling your position and earning fees at the same time. So that's something I like to do when I get the chance from a bottom range when things dip. Now I can't find the pool. I'll have to look at a different time.
Yeah, one thing I was thinking with liquidity pools is how, especially because they have a range, and if you all don't know what that means, it's like with these pools, you have to set the price for like the range, say from $19 to $23 for it to be active for you to actually earn those fees. And basically, if you want to know how to set those ranges, a good thing to do it with is using a support and resistance. So literally, like you can just, oh yeah, she just came out and then, but yeah, like a good way to yeah, just like support and resistance. Like if you can see, okay, it kind of stays around this price, you know, that could be like potentially a midpoint or even like a ending point, you know. So I'm just letting y'all know y'all can use support and resistance to determine your ranges when you're making your liquidity pools. That's a very, very good technique. And you can even have multiple liquidity pools with the same coin that use different support and resistances so that you don't have to constantly keep trying to switch it out when it leaves, like when one liquidity pool like goes to another price point, you can just have multiple, and they're set for different support and resistance levels. So yeah.
Yeah, that would be like, stacking LPs on top of each other. So you could have one in like a 32 to 37 ETH, like that could be your range for Ethereum. 3200 to 7200, that could be your range. And then, you could stack it, have another one that starts up at 4000 to, 4500 or whatever. So yeah, you could definitely do that. And sometimes it's good to do that, especially if you're kind of bullish, but you do want to sell. You want to be, uh, get out at a certain price just a little bit, or just kind of trim your exposure a little bit at a certain price. Like I said, you could just do that pool, especially like a range like that on Ethereum, 3200 to like 38. Like it's gonna chop in that area. You know what I'm saying? So you're gonna earn fees. You're gonna print. But what I wanted to show you guys, just for the purposes of that pool, I had just found it quite good, so I'll try to drop it in the chat.
Okay, cool.
So just kind of looking at a rough. Oh, let me take these moon phases off. I'm like, why is it? All right. So you could just drop a range in from here to here. Let's see, what would that be? That would be a 72% width. That would be pretty good. Wonder what that would print. But obviously this would be a more risky pool because these are two altcoins. This is Aave and Link. So this would be, more higher risk type of pool. But they kind of been chopping in this range, so I feel like you would low-key print. And if you like you're bullish Aave and Link Quaku, this would be, something probably really good. Not deck screener. Let's go back here. So yeah, I'm looking at Aave in terms of Link. Man, it's pretty good. Let me just bring this up to 80. Okay, so you guys can see that? Like, that would be the range. Let's see. Bring it down a little. So, let's say we started out with... that won't be too wide. Oh, sorry, I just realized what the problem was. I gotta flip it. There we go. Okay, so that would, where I have it at would be like 21%. It's not terrible, but it's not good. I don't know. You have to play around with it, see what the good range would be. But
So is this the pools on Uniswap?
yeah, it's on Uniswap and it's on Arbitrum. Has a 3% fee tier. Let me copy pasta.
We got someone in the chat who said, not sure which system mentioned the California company to access home equity. Uh, are you? Are you? Do you know what she's referring to?
I can't remember what the name of it she said was.
Okay.
Okay.
How do I connect this wallet? Also, recently, I don't know if you guys can you guys see the screen?
Yep, I see you.
Okay. Yeah, I've been using Control Wallet lately. It used to be XDeFi, but now they're known as Control. And I think it might be my new go-to wallet. It basically supports all the chains, so I can just have them all on this one wallet, this one seed. For a hot wallet, of course. So, uh, let me see. How do I connect this? There it is.
And how do you access that wallet? This control wallet? How do you find it?
Uh, Give me 1 second. I'm just connecting my wallet, and then I'll show you guys the website.
All right.
Connect. Should be connected now. Or not. Okay, there we go. So control, here it is. Control XYZ. Like I said, it used to be known as XDeFi, so if you've kind of been in this game, you might be familiar with this wallet already. And they also do allow you to have a gas account, just like Rabby Wallet, where you can just throw some USDC up there, and you don't have to worry about, having Ethereum or having such and such. Um, I want to just show you guys kind of how to get in the pool. Let's say if I, so let's say I'm on the wrong pool. Give me 1 second. Yep, there we go. So if you just want to supply liquidity and you can do this, on Uniswap, LFJ, or Aerodrome, whichever, decks you prefer. But, you just come in and say, okay, so basically what I was saying about, coming in mostly on, okay, let's actually talk about the LP, the way it works. So if I come in right here, you can see all on the lower price end, I'm in USDC. On the upper price end, I'm all in Solana. So that means on this side, I'm selling all of my Solana at these particular price points for stables for USDC. And then on the downside, I'm buying, so essentially dollar cost averaging in each one of these little bins into Solana, right? So you can kind of see concentrated liquidity in a few different ways. If you know about options, you can see them kind of as an option, like a short put or something like that. But you can use this to dollar cost average into Solana as it goes down, or Ethereum, or Aave, and still get paid to do it, versus just buying it or just dollar cost averaging. You actually get paid to do it. Then on the upside, say once Solana gets to let's say once Solana gets to 160, that's when you would want to start selling, right? So you could structure your pool in that way where up to 160 you would be buying, but once it gets to 160, you're selling all your Solana for USDC. And so, liquidity pools are more than just earning, There's like, different ways, like I said, you can look at them as an ability to dollar cost average in or out of an asset, to get more tokens at a lower price, as well as get paid to do it at the same time. If you already have Solana, if you already have Aave, you could put it in a pool and you can start earning more Aave and more Solana, which is essentially a zero cost basis. So you're getting more assets without paying for it. You know what I'm saying? Also, the best thing, this is actually why I want to show you guys liquidity pool. I might have to disconnect and connect to the one that has the money in it. Give me 1 second. Crypto is the only thing I know in the world where you could put money in today and make money that same block. I don't know anything else in the world where you could put money in today and you can make money that same minute, that same second, that same literally right then and there. And you can see it. I don't know nothing else like that. If any of you guys do, you could let me know because I want to get into that as well. But that's also one of the most magnificent and really underrated parts about this market is I can just, if we're just talking Aave, right? I can just come on Aave and literally just throw money in here right now and start earning. And I can see it accrue. Also, if you guys use Aave, definitely look into Savings Go. It's been going down a little bit lately, but it's still is a bit higher than usually just putting stable coins on here. Like if you're kind of using this as more of a savings and less for the collateral purposes, that would be something good to do. You can see it's gone down over the last month. Yeah. Something else I want to say as well with Aave is that the governance is kind of going through, and they might be adding more benefits to holding Aave. You can check that out in the governance and look at the proposals. But I think that's just gonna make more people even want to buy the Aave token if you haven't already. Let me go back to this. I wanted to show you guys. All right. So I can literally do $2. The other thing is you can kind of do a strategically by looking at where liquidity is placed. That's the great thing about the transparency of the blockchain. Like I can see where people place their liquidity and see where it's thin. and kind of, you know, um tailor where I put my liquidity to where other people have theirs as well. But um I'm just gonna enter this real quick with like $4, just so you guys can see the literal half a penny cents that I earn. But that it literally happens right here, right now. Just give me 1 second to see. Yeah.
I just want to say, y'all are getting a step by step how to invest in liquidity pools, how to put your money in liquidity pools. And this is going to be recorded. It will be on YouTube, so you can watch this back and follow it step by step. So just want y'all to know what y'all are really watching. This is very, very powerful, what we're doing. So yeah, it's amazing.
Thank y'all so much. Much gratitude.
I don't know which one I should click. Maybe just do OKC. Continue control. What you guys see me doing now is I'm just swapping because I don't want to get my money stuck because I don't have that much gas. I just threw like $50 over here. And I threw like $5 in Sol, which I probably should did the opposite, more Sol than USDC. Just give me a second. I'm gonna just swap so I can have enough gas. Oh, I just realized you guys can't see. It doesn't show my wallet because I was gonna show you guys you can have a gas tank with USDC on Control Wallet, just like if you do that on Rabby Wallet. You guys know what I'm talking about.
Can you go into that a little more? Because I kind of don't get that all the way with the
The
gas.
gas account.
Yeah.
Okay. Let's see if I can
I know you're
see.
doing like 5 things at once.
No, it's fine. So universal gas token. So you can deposit control to your gas tank and use it to pay gas fees on 36 blockchains. You can also deposit USDC into your gas tank and use it to pay gas fees on like 40 some chains. I think it's more than control. Um this is also something interesting. I don't know. I wish they would just give me the revenue. Like, why buy back and burn? Just give me the money. I'm not really a big fan of buy back and burn. It's probably one of the dumbest things in crypto. Just give me the money. Why buy the tokens on the market when you could just give me the revenue? You know what I'm saying? Like, that's why I love Aerodrome and Velodrome and Curve and like stuff like that so much, because they're not taking the revenue and buying back the token to give me nothing so that I can just have a buyback and burn. No, they're giving me all of the revenue. No buyback and burn BS. To me, it's like one of the biggest scams in crypto. Why would you use perfectly good revenue to buy a token and burn it to reduce supply when you could have just had a lesser supply when you made the token? I don't know.
Mm.
Am I missing something?
Nah,
Somebody let me know.
I think people like that reducing supply kind of thing. It makes it feel like it's,
It's
uh,
meme-matic. It's not real.
yeah,
It's not
yeah.
real.
It's kind of a word. Yeah. But no, I get what you're saying. The gas stuff, that is actually fire because even with, actually, so I don't know if Rabby Wallet does this too. I didn't even know, but like,
Yeah,
I
it
know
does.
when
It
I'm
has a
using,
USDC gas account. It definitely does.
hey, I need to tap in with that because when I'm using other chains, like I'll switch between Avalanche or Arbitrum. I gotta get Ethereum Arbitrum. I gotta have Avalanche, and I gotta bridge it over and all that stuff. But you're saying now I don't have to do that. It will pull from that gas account.
Yeah, just from that gas account. So you just got to keep topping it up.
Now
Just like when
that's
you drive
great.
your car, you got to
Now
keep topping it
that's
up.
because the bridge. Every time you got a bridge, they taking a little fee. You know.
Yeah,
So
yeah,
yeah.
yeah. They take
Okay.
a fee.
No more
So
bridging.
Yeah, no more bridging. Use the gas account, especially, well, beginner or not beginner, but definitely for beginners. I feel like the gas account is super helpful because you don't have to, like, I remember way before there was even a Rabbit, when you had to use, MetaMask, and you had to import each new chain, and then you had to go to Chain ID and find, like, this total game changer. Just being able to throw some USDC in the wallet and being able to use it. And then again, like I said, control is how did I get back to the other page? Um Maybe support? No. But basically it's on like 200 some chains that I can use this wallet, right? Like, well, you guys can't see it when I open it up, but let me just double check. So if I want to send to this wallet, oh yeah, and it's actually super easy to add money to this gas tank balance. But yeah, this wallet works on 20 something chains. It works on uh Bitcoin native, I'm pretty sure. Let me double check. Yeah, 200 chains, Bitcoin, Base, Litecoin, Polygon, obviously Solana. Um yeah. Basically all of the major chains that you're probably using, it's on there. So that could be very helpful if you're going from Solana to EVM, and maybe you want to have a little Bitcoin in a hot wallet. You know what I'm saying? It could be definitely very useful. So let me go back here. Yeah, I know that transaction failed. All right, let me just refresh this. Okay, so you can see the Solana there. Let's add position. Gonna add $1. And you see it's 51 to 62. I'm actually gonna tighten it since it's literally just $1. B tier. Where did I show you that info on here? Oh, okay. All right, cool. Gonna add. Okay. So, I'm not particularly. Okay, so you guys can see right now, I literally just did this, right? You guys see the money? Might be half a penny, but you know what I'm saying? If I had it at $100 or $100,000, you know what I mean? What other market can you put money in? As soon as you put the money in, it makes money. Let's just refresh just to show you. Okay. So I'm in a pool. Yeah, I have like Solana and stuff like that, but for me there wasn't anything investable in Solana, so I haven't really been doing much with it. Um, I'm definitely thinking about throwing some in an LP, along with I've been looking at Pump and putting some in a Pump LP, like a Pump USDC LP. Um, yeah, that might be something I might do. Because I don't really see the point in holding Pump. You don't earn anything from it. That's another one. It's like they use all the revenue from Pump to buy more Pump. Why not just give me the money? I don't get it.
You can do pump LP on this Meteor platform.
Yes, you can.
Okay.
Let's go to pump. So we got a few of them. We got pump Sol, pump USDC, pump USDT. Let's just do. I don't have any pumps, so I actually can't do this. I would have to swap for some real quick. But I do think this would be a good pool to get into, depending upon where we are in the market. I don't know if right now would be the time to do that, unless you just wanted to accumulate more pump at a lower price, perhaps. But I would do it more. I mean, I guess you could do it now at the lower range, and kind of leave a higher upper bound. Um, that way, once the market starts to move, you won't have to rebalance or anything like that. And rebalance just means if I'm in a pool that's, you know, if I'm in an ETH pool and ETH is $3,000, and okay, so if I'm in a pool and it's like 3,000 to 3,500, but ETH is 3,000 right now, right? So I'm at the lower bound of my pool, or my range rather. And if ETH shoots up to like 3,300, and I'm like, oh snap, it's probably gonna go past 3,500, I'll have to either remove some liquidity from the lower end and add it to the top, if that makes sense. So take some liquidity from below 3,300 and add it above 3,500. So I can have a range that would be 3,300 to say 4,000 now. So that would be to rebalance. So that's when you make impermanent loss permanent. Whenever you rebalance, take money out, or anything like that, you're making it permanent. But yeah, any questions or anything? Did that make sense?
That did. Just if you don't mind explaining impermanent loss for the people who don't know what that is.
Yeah, no problem. So, permanent loss, also known as divergence loss. Divergence loss makes a bit more common sense than impermanent loss, but essentially what it means is, how do I go back to that portfolio? Okay, so what impermanent loss means is I'm supplying my money in a very particular range, right? And the way liquidity pools work is you're selling the you're selling the token that is performing better for the token that's performing worse. So if Solana starts to rip, I will remember, let's bring this up. If it starts to come higher into this range, I'll be selling all of this Solana for USDC. And so the way or where impermanent loss comes in, or divergent loss, is where basically the so there's one of two ways. Either the amount of tokens that you started out with in the pool, you end up with less tokens. Basically because of all the swapping that's going on when price moves. You end up with less tokens. Another way to look at it is when I exit the pool, you could have less US dollar value than when you entered the pool. Again, because of all the swapping that's happening inside the pool. So impermanent loss basically just means, again, one token that's performing better is being sold for the token that's underperforming. And there can be a discrepancy in between, like, from a half a cent or a half a penny in between that can create loss. The reason why it's called impermanent is because you don't realize it until you take the money out the pool. So the reason why people steal LP is because the point is to make more fees that it makes up for however much you lose in impermanent loss. And an easy way to see that is, okay, I started this pool with $1.75, but now I have less than 75 cents, right? So I have a loss because the price has gone down since I got in. But if I stay in this pool long enough, I might earn enough fees where it covers that loss. If that makes sense. It just has to do with the fact that the price of the tokens are moving.
That makes sense. And you were also saying how you can rebalance the without exiting your position. That's what you were saying you can do.
Yeah, some platforms you can withdraw a portion. Like on LFJ, I can withdraw some of my liquidity, not all. So I
Okay.
can withdraw like $10 and then add that $10 back into the pool, but at a different price point.
Mm-hmm. Are you able to do that with Meteor?
Pretty sure you have to withdraw all because yeah, you have to withdraw all.
Okay.
Yeah.
Okay. That's good to know, though, that you can do that with LFJ. Because yeah, that sounds like a good move, though. Being able to rebalance before you're out of the range.
Yep. Yeah, especially if it's kind of something that you just want to keep earning on, then that's something that you'll want to do. Is rebalance. Or you don't have to take out money. What you can also do is add more money. So you could add another $50 or another $1,000 to the pool and just
Mm-hmm.
add it, on top or on the bottom. You know what I'm saying? So,
Okay. That makes sense. That'll keep you in the game more.
oh,
Okay.
that's a good number. Yep.
So I have another question. If you were to stack liquidity pools, like would you do two volatile pairs, one a stable, and then a volatile like a coin, and then another like you are all stable. You know what I'm saying? But they're all like in the same network. Just thinking of like a little strategy, like a stacking strategy that all help each other out. Like it's not like they're just scattered, you know.
Yeah. Um, the benefit of a stable LP, we could just kind of look at Uniswap while I'm talking about this, is you're typically going to earn more. Ooh, Uniswap token is down bad. 530. Hold on, let me go back to that right quick. 531. Again, I'm not telling anybody what to do with their money or what not to do with their money, but not sure why you would buy Uni token when you can just farm it. And if you don't know the difference, you need to stick around DeFi a little bit longer and learn the difference. Yeah, Uniswap is not a token. In fact, if anybody is telling you you should probably buy Uniswap, you might not want to listen to them. I'm gonna just keep it a buck. Um, I lost your question in that. Sorry, Kweku. What
We
was
were
the
talking about
question
the
again?
stable pairs and how,
Yeah,
like
stable pairs. There we
yeah.
go. Got it back. Thank you. I lost it in that price action. All right. Let's see what they got. USDC. And what I mean by farm is how they have these rewards, uni rewards on a particular pool. So if you want uni token, you should be farming it or like going in LP, I guess. You know what I mean? But I don't know why you would purchase Uniswap. That's a little crazy. To me, at least. Everybody can do what they want to do with their money. Alright, these are kind of low. But, oh, this one's kind of good. This is gold and USDC. But let's just take one of these right here. So, the one reason why you want to do a stable pair is because typically you're going to earn more than like a lending, just lending stable coins. You know, this typically is going to be around, right now it's like 6%, but it was usually closer to like 10, 12%. It just has to do with volume, of course, like everything. But as far as stacking, like while you would do, I don't know, I never really thought about it like that. I kind of just see pools more like like what you're talking about would be kind of using it more like as a trading strategy and using the stable positions as kind of a hedge for when you're for when the market is a bit maybe more volatile and your altcoin pairs kind of take a 40% dump because each token dumped 20%, right? But at least your stable pair is still relatively at that same price. Like if you put in 10K, it's probably still right around 10K. You know what I'm saying? Especially kind of with USDC and USDT, they're paired pretty well. You know, not every stablecoin is actually stable, so that's also something you want to pay attention to. Is that coin actually stable? You know, they have pretty good pairs, but they have millions and billions of dollars they spend on market making to keep their pair stable. You know, Curve USDC, or not Curve USDC, Curve USD has, you know, the peg keepers, which act as the market makers to keep Curve at $1. You know what I'm saying? So every stable has their own way of keeping it at $1. So just make sure your stable is actually stable. But yeah, so that's kind of how I see it based on what you asked me. Is seeing it more as like a hedge. I would see it more like trading and a hedge, and how I would have it allocated would be based upon risk. The altcoin pair is obviously more risky than like an AVAX Bitcoin pair or an AVAX stablecoin pair. So I would have less in that, and it's also typically going to make you more money on the upside, because you're going to have more price appreciation and you're going to have the fees. That's the other thing. If you're in a so back to pools. Actually, if you're in a pool just like this pool, right, where I have a stable coin, I have a volatile pair, there is damn, I lost what I was just about to say. Damn, just that fast. Oh, that's what it is, because the price of the tokens. So you're basically, okay, so you have Solana in a pair in this, and you have USDC in this, right? And when Solana goes up, you get some of that price appreciation, but it's muted because you have stable coins as well. And if Solana goes down, you get that depreciation, but you get less because you have stable coins as well. And then, you know, you add in the fees, which helps on both sides. So just keep that in mind if you're in a stablecoin volatile pair, especially in all like AVAX or Solana or, you know, Pump or what have you, that your upside and your downside is muted when you pair it with a stable.
Okay, so peep this. This is a little example that I just wrote in my notes. Wondering, just throwing it out there, if this is like a way to maybe have a little advantage when it comes to stacking liquidity pools. So it'll be four So if say if I'm using LFJ, it'll be four pairs. No, four
Mm-hmm.
liquidity pools. AVAX to BTC, then AVAX to USDC, then BTC to USDT, and then USDC to USDT. And I'm like, will it all kind of like balance out so that in the times where AVAX is lower, um, or it's not it. I don't know. It just feels like something. It kind of feels like a cool experiment. I don't know. So I'm just throwing that out there, and I just thought of it just now because, like you said, doing the alt to alt might be kind of risky, but doing the alt to Bitcoin, which still has price movement,
Mm-hmm.
could potentially be a play. So and like having them, but the Bitcoin, because then also maybe one stable coin is getting a little more traction than the other. So that's why you got two alt to stable coins because and then vice versa. That's why you got two altcoins. Well, Bitcoin's not really altcoin, but two price movement coins. So
Yeah.
just
Yeah, I
that out there.
definitely say that makes sense. I have a um damn USDC and USDT ETH pool um on, I think it's Base. So, both stables, just because they kind of earn a little bit differently. The ranges are also different, but they earn a little bit differently.
Hmm.
Um, USDC, I mean, not Base. I have a USDC one on Base and a USDT one on Arbitrum. And, just based on that, they just earn a little bit differently. But you can still capture the volume of both stable coins, and they're both still relatively like stable coins as far as them being a dollar.
Hmm.
So yeah, you can definitely do that. Do AVAX USDC and AVAX USDT. And pairing it with Bitcoin, you might earn less than the stablecoin pair, but you also might have like better, like if you put in $1,000, it might be closer to $1,000 if it's not too much volatility. You know what I mean?
Right. Yeah, I'm thinking it would protect you more in volatile markets compared to doing the altcoin pair.
Yeah, exactly,
Yeah.
exactly. And even like what we were talking about, I remember one time just with having gold in your portfolio.
Okay.
And let me go back to
Oh, they got
Aave.
gold liquidity pools.
Yeah, they got
Probably.
gold everything over here. Let me go back to Aave. Let's go to markets. Let's go to, because Aave Dow just voted to, or somebody did put a proposal. I don't know if they voted on it yet, to raise the cap on this gold so people can deposit more, right? Because I can deposit my Tether gold and borrow against it, and this has less volatility than you know Bitcoin, than
Mhm.
ETH, than Wrapped ETH. You know what I mean? But it's
Yeah.
not stablecoin, so I still have the ability to have price appreciation, right?
Hmm.
But my downside is lesser, and there's less risk of volatility because gold is less volatile than Bitcoin or than ETH, or insert whatever altcoin. So you can have gold on chain and have that also be a part of your on chain portfolio, not just your buying gold and holding it portfolio.
Hmm. Okay. So this platform is simulate. It allows you to like simulate what your what a liquidity pool would look like. It's not actually real.
No.
What you're on? Oh, oh,
Um. So what I kind of just want to show you is um. It's not exactly even, but so on a gold Bitcoin, you could do like say 30 to 40% on gold and Bitcoin in this range. You know what I mean? Or let's say it's even 15% on gold and Bitcoin though, and you're earning, right? Because this is Uniswap, so you earn in whatever tokens you put up, you're gonna earn back in those tokens. And for tax purposes, you are using the smart contract in a similar fashion as like a fiduciary or a custodian, and it facilitates all swaps on your behalf. You do not do any swaps. So if you're worried about swapping being a taxable event, you can always just put your money in an LP and let the smart contract do it for you. You have no swaps that you have ever conducted. So just a little free game for you. But um yeah, I just really just kind of wanted to show you this just to say, like, you know, you can have gold on chain and do 30-40% and earn gold and Bitcoin. I'm actually in a gold pair, so Tether Gold and Pax Gold, and it's been doing like 10%, 15%. It's been averaging around like 10%, 10 to 12%, I would say. So like uh maybe like point six something like that a month, and it's on gold though. You know what I'm saying? So I'm just earning gold, which on chain gold has become definitely something where there's more volume. So that's definitely a pair if you're interested in gold and having gold exposure. Something I would look at because it's definitely having more volume from just even a year ago.
It has seemed like it's gotten more popular to trade gold in the last year. Definitely noticed that.
Yeah. And even though this is small, this number has gone up this entire time. I've supplied this liquidity though. I just do want to point that out. And again, as soon as I supplied that liquidity, we saw numbers over here, right? We all saw that. So earning immediately. I don't know anywhere else where you can earn immediately. Do you?
You right?
And earn significantly. You know what I mean? Like even if you just throwing it up your own Aave and earning, 5, 6%, you know, 6.5%, 7%. T bills are like what, like 4% right now. So yeah, just food for thought. But yeah, that's all I really had to share with you guys. Any questions or anything?
Okay, I do have a question. So with this metrics finance, I just pulled up the website and it said, does it cost to like work on it? Because it said $800 a year.
Yeah, it
But now,
costs. It's you got to pay
okay,
for it.
okay, okay.
But you can use the free tools. Or you can pay for it. Honestly, this is what I'm gonna say. This is made by White Boy Jake Call, and it's wild because I was like, I need to when he was making this, or like when he first started previewing it, or whatever. Because there's this old one from way back, fish. What is it? Fish pools or whatever. But it's not as good. It doesn't like he's using the graph. He's got subgraphs to pulling in data straight from the blockchain. And anyway, the data is just a little bit better over there and the tooling. But my point in saying this is this white boy like my age made this, and same time I was like, bro, we need something like this. And then I saw him make this and I'm like, this is pretty tough. Like I would pay for it. Especially if you got like a significant portfolio on chain. It's definitely worth it. Um yeah, I don't really have any bad things to say about it or anything like that. You can check him out on YouTube, Jake Call. He has a lot of great videos on DeFi, liquidity pools, and stuff like that. Um, if you want to check out more stuff on YouTube. Um, but yeah,
What's his name again? What's his
Jake
name?
Call. I'll go to his YouTube for you guys so you can.
Okay.
Oh, but my whole point in saying that was, so because this is a new market, an emerging market, and you know, we're have the ability as everyday people to be market makers. Let me where's Perplexity? Some things. Oh, also abundance 444. If you could type in the chat what the equity, the house equity uh company you were talk or project you were talking about out of California, that would be awesome. Or you can just tell us, or you can type it in the chat if you're still here with us.
It's Vesta Equity.
Vesta Equity. Okay, thank you.
You're welcome.
Um, I don't know if any of you guys have ever also looked into Lofty AI, but you can basically all they do is they put the house in a Wyoming Dow LLC, and then you can sell a certain amount of tokens of your house, however many you want. So I don't know if it was a house you live in or if it's a rental property or something like that. But if it's a rental, it's definitely something you should look at.
So I actually own a mobile home. So I own the home. Obviously, the land that I live on is still rented, if that makes sense. So I pay a
Mm-hmm.
mortgage and a rent at the same time. So I wonder how that would work.
Okay. Yeah, I've only seen, I think you have to own the land or the land has to be a part of the deal. So if you could get some sort of like a 99-year lease with whoever owns the land, that would work. You know what I mean? For the Dow LLC. That would be a way to do that.
Okay, I'm gonna
So,
definitely take a look at it. Thank you so much for that one.
yeah, of course. Um and Lofty AI is on the Algorand network, just in case you were looking for it. It's on the Algorand network. So, a market maker is a firm or an individual that actively provides buy and sell quotes for financial securities, constantly standing ready to purchase from sellers and sell to buyers at a public quoted price. So that is literally liquidity pools, is it not? The main role is to provide what? Liquidity. All right? Which means ensuring that there is always someone to trade with in the market, reducing the time and the price impact, right? Because we know the more liquidity in a Uniswap pool or the more liquidity in insert whatever DEX pool, the better the swap rate you're gonna get. That's why I showed you guys last time to use um like aggregators like DeFi Llama. Um they have an aggregator. What is it? DeFi Llama Ag. That showed me the aggregator volume. I don't know. It's being slow. Llama Swap. Here we go. That's what it's called. Llama Swap. Let me go back to the chat. I'll throw this in the chat. So if you guys are going to swap, always make sure you're getting the best swap rate. You always want to get the best rate. All right. Just like with anything else, your jeans, your shoes, your car, whatever, phone. Okay. We do price. You know what I'm saying? We look around for our prices. You know what I'm saying? Because one, you can like especially well, even if it's not size, like even if you're doing $10 or $10,000, every dollar, every $20 counts. It counts. You know what I mean? So you always want to make sure you're getting the best swap rate. So come over here and It's still Paraswap. But anyway, it's just gonna show you the best. It basically aggregates all of every swap you can, think of, is gonna aggregate it, bring it over here. So you can always get the best swap rate and you can always check. Yeah, there you go, this is better. So you can see you got 1inch, you got Paraswap, you got CalSwap. I use CalSwap a lot. Odos, I use that a lot. I like Odos because they show you the route. I just want to show you guys this real quick because it shows you the route that it takes. All right. Say I wanted to go to base and I wanted, well, not that. I just wanted USDC. Plain old USDC. All right. So I kind of just want to show you this from a liquidity standpoint. Like, look at how many dexes they're going through to make this swap happen to get you the best rate. Uniswap, they're going through Pancake, they're going through Camelot. And I say this just to say, like, if you go to Uniswap and just do this swap, there's no way you would have got this great rate that you're gonna get over here. So, you know, you can use Odos, you can use CalSwap, you can just go to like I showed you, swaps.defilama.com and just come here. But either way, you just, you know what I'm saying, use an aggregator. Don't just go to Uniswap front end. So back to, like I was just showing you guys, what a market maker is. So this is what you're doing when you're providing liquidity, right? You're a market maker in this. And this is the first time where anybody anywhere in the world can be a market maker. If you have Ethereum, you got USDC, you got Aave, really all you need is the gas token, ETH. As long as you got ETH, you can buy whatever you want on Uniswap, on SushiSwap, wherever, Aerodrome, whatever, right? And then you can put it up into the pool and supply liquidity. Anybody can be a market maker, right? Doesn't matter if it's $1 or $1,000,000. You can do it, which is even wilder. So where I was going with this was that he created, Jake Call created Metrics Finance, and I think it was great and very well needed. And if you guys know any devs or any, like, statisticians or anybody sort of in that realm, tell them to come here because there's so many tools that need to be built that TradFi has that, just are non-existent over here because market making isn't an institutional situation, if you guys know what I mean, where an institution is going to build out all these tools to use, you know? So, we just all gotta, whoever wants to build the tools is how we're gonna get them. There's another one I used too, built by some guys in the Flare network and Flare ecosystem. But yeah, just tools that we need to kind of get the job done. I mean, you could do it without this, but this, especially this track, like if you're gonna pay for it, definitely, I would I would say it's worth it. For the track, and it shows you how much you're actually retaining, how much you're paying, how much you're using on gas, right? Because a lot of people don't calculate how much they're spending to claim, how much they're spending to deploy. So if you spend $30 just to put a position together in gas fees, right, and slippage, and you don't make $30 for 2 weeks, that position is very unprofitable. You know what I mean? So it's just small things when it comes to LP that this just helps you track because it just pulls all that data in the blockchain and makes it very viewable and easy for the human eye to read it. Yeah, I just use it from time to time. I don't always use it. But yeah. Any other questions or anything? Okay, I guess no more questions.
Someone asked, "Did you discuss LP on Crystal?"
Yeah, I can show you guys that. Oh, also somebody asked about Polymarket. I definitely want to get to that in a second too. And if any of you guys bet, I would definitely suggest you use overtime if you're like into sports betting. And also if you don't know about Billy Bets and you're into sports betting, you really need to get on that. And Billy is a AI agent on the Base Network. He got some good picks too. Better than a lot of these discords. And I actually wonder at what point are a lot of these sports betting discords just gonna implement AI agents to do it. I mean, I would. um yeah, some kind of flow with that. So Crystal as well as Aperture DeFi. I don't think I spelled that right. No, I didn't. Alright. So I've actually used Aperture more than I've used Crystal. Just because Crystal was like a little buggy at one point. But let's just do yeah, so you can come on here and if you have a position already on the DEX, you can just import it over here. And they're essentially a liquidity manager. Crystal has the same sort of features, liquidity management. You can also create like vaults or strategies and people can deposit into them as well. And you can just kind of earn off of that as well, which is potential income, revenue for you. Take a percentage off this. Like this one is up. That's damn good on profit, right? 1 year, 2 years, this one is up. So, I mean, you got to do your due diligence on each of those, of course. But yeah, I mean, I use Crystal like when it first came out. I'll be completely honest with you. I don't really use it at all anymore. I just don't like when I come to this page that this is what I'm seeing. So I just keep it real with you. I just stop using it. I just prefer Aperture. Also, another one if you want like a LP manager is VFAT. VFAT IO is super popular with a lot of people. It's a little buggy. I prefer Aperture, not as buggy. Yeah. But essentially, like I was saying, so Aperture, you can, if I had a position on Aerodrome, I could import it over here. And then I could, do automated rebalancing or, you know, like claim fees and send it to my wallet in stable coins. So like if I earn like $30 in fees a day, I can have it claim all those fees and send it to my wallet in stable coins, right? Or send it to my accounts receivable wallet in stable coins. Um but yeah, you can definitely use Crystal to LP. And you can, VFAT, Aperture, Crystal, they all have different portfolio management. Something else I wanted to show you over here. See if it'll open. They had their own Uniswap Oh yeah, here it is. They have their own like Uniswap calculator. So let's just do ETH. And let me just go back for a sec. Or do I have to redo that whole thing? Okay, that's fine. I just want to point this out. Like I have to choose a fee tier, right? On LFJ, no fee tier choosing. Also, Airdrome, Velodrome, Drumos, Drumos Labs just put out a tweet like a week ago that Aerodrome and Velodrome will be having dynamic fees. So I won't have to choose a fee tier anymore, which is awesome. I think most dexes should do away with that. Like we need to move into a different era. By the way, Curve has already had dynamic fees since way before. Way before. Just a FYI. Curve is still some of the best tech. Not necessarily the best investment though, but great tech. It is paying more though lately since yield bases. But let me go back and let me just show you guys this. Anyway, I just wanted to show you that they also have a similar calculator thing where you can simulate your position like I just did on metrics. So if you wanted to use Aperture instead, you could. Someone I remember I wanted to go to Poly Market. I might have to connect though. Let's go. Let's do Mexico.
Someone just asked if you had. I was just gonna say
Yeah,
someone had said if you had $300,000, how would you invest it and make it grow? Hey, I feel it.
I could definitely show you that. Let me just do Poly Market and then I got you on that. Because someone been asked about Poly Market. So if you're into like, using a platform because they're going to get an airdrop, you want to do a little airdrop farming, I would definitely come over here and do that on Poly Market. Taki, he had been posted about this. Let me show you his YouTube too. But I just want to show you guys, like, he has a shit ton of. I watch like almost all of his stuff on here. That's why I like. If you guys ever hear me talk about YouTube and DeFi, I've damn near watched everything on YouTube about DeFi. There's not one person I haven't. Don't matter if they got 200 subscribers or 200,000. So just so you guys can see, he has a program. You could pay him. He could help you out, stuff like that. But the videos are great. Great content. He knows what he's doing. He's been doing this a while. Let me do Taki DeFi. I think it's how do you spell his name? Taki. There you go. The Humble Farmer. If you're on Twitter, definitely follow him on Twitter as well. Also, by the way, when Taki goes short $1 million on ETH babes, like, bro, we're about to. You can use him as like a reverse signal sometimes with that. But okay, here. This video he did on how to farm the Poly Market airdrop in 2025. So you can watch this on your own time. But if you like I said, if you're into farming for airdrops, you could just come on here and just throw a few dollars around. You don't have to do anything super serious. Or you could. Like if you wanted to bet on the Flyers, you can. If you think Morado is going to be out, you can. Also, something interesting about Poly Market is Romania, the Romanian government just banned Poly Market like last week because basically people were betting on their election and they didn't like that, so they banned it. Which is crazy. But it don't mean you can't still use it. You just need a VPN. I think the New York election already happened because that whatever that was supposed to be some Muslim guy or something that was going against Como or something that was up here. You could bet on the government shutdown, Chile president, ceasefire. Like you could bet on anything you want over here. It's crazy. Um, I have used it. I'm not really like gambling isn't necessarily my thing, but you know, that's something you're into. You can definitely you can definitely do that over here. Kalshi or Kashi is another one. I think Kashi or something like that. I might not have spelled that right, but there's another one anyway. Um, oh, what I was talking about if you want to bet sports betting is overtime. Also, uh, actually, I'll just show you if they verify me. It might be the VPN. Yep, might be the VPN. Maybe not. All right. So you can bet, like I said, on basically everything. I had bet on some tennis over here one time, and then I had bet on something else. I think it was soccer or something. And football with Billy Bets when I was testing that out and everything. But something I found more interesting was coming over here, depositing some ETH, and earning um off of the people gambling, right? So the average return rate each round is about 0.73%. And this is the ETH ball, so you're getting paid in ETH, right? You can see lifetime up 52% in ETH, right? Projected, projected. Even if this comes down to like 30%, there's still 30% ETH. So something. And then obviously you got stable coins. Stable coins is actually pretty good too. And they have not been anywhere near this cap, which I find interesting, given that this protocol works perfectly fine. Surprised more people don't use it. It's a bet. Um, Let me just bring that back up. So yeah, someone had asked. Let me see. What was the question? If you had 30K, how would you invest it to make it grow? Um, just DeFi. Okay, that's actually a pretty good question. Yes. Okay. Cool. Let me see. Let's do freeform. All right. So if you had 30K, um, at this point in the market, things are really down, so you could still end up with like a 10x. You know what I mean? To like 300K. So that's something to keep in mind. But I would be shooting for something like an 8x. I don't like that circle, but I would be shooting for something like an 8x total on the portfolio to get. Um, Now how I would do that. So first thing first, never neglect the cash position. Again, like I said, I think a lot of people just over leverage and don't have a cash position. Um, so I would do like 10% cash and then 20% BTC. Like I would just buy BTC spot. Whatever you get for that is whatever you get, and then 10% stables. Right. So that's 30. I would probably do 30%. I would do 30% cash flow. And then I would do 40%, like just holding some coins. Yeah. But out of this, 40%, there's just gonna be holding coins. I would do very little bit like high risk. Because you have 30K, you really don't have to go, you know, balls to the wall crazy with risk to get where you want to get. Like, even just with the cash flow, if you can cash flow, say 30%, so that would be 9 grand. That would be 9 grand. 30%. What's 30% of 9 grand? I don't know why I can't do mental math right now. Give me 1 second. What do I mean by cash flow? Okay, so that's what I thought. 2,700. So, what I mean by cash flow, in this market, there's like a few ways to get cash flow. You've got lending. Oop. You've got lending. You have, liquidity. Let's just do lit pool. I don't feel like spelling it out. Let's just do liquidity pool. Then you have more like a dividend style, if you will. Those are like the three main ways to cash flow. Lending, this is going to be your Aave. This is going to be compound. Morpho, Silo, Llamalin. Your liquidity pools are going to be more so what I was showing you with Uniswap and Meteor, like what I just entered, that Solana pool, right? That's going to be your liquidity pools. So you're going to pair two assets. So you're going to have Sol USDC, ETH, Aave, etc., etc. Dividend is going to be something different. Dividend is going to be either you're like staking it for a period of time or locking up the tokens for a period of time. So me personally, like I have a VE curve position and positions on the drones, Velodrome and Aerodrome, and essentially you lock up tokens and you get rights to a percentage of the revenue pro rata, you know what I'm saying? Whatever, however many, basically your percentage of the total lock amount of tokens you get paid. Let me say that in a different way. You lock up your tokens and you get in exchange, an NFT. That's essentially your receipt for locking up those tokens. And those tokens come with revenues rights. So you can get a percentage of a decentralized exchange revenues. So instead of being in a liquidity pool, right, and earning the fees, and you're exposed to impermanent loss and just general risk of a liquidity pool. With this, you just have, right, because this is double, you're in two tokens. So you have the risk of the two tokens. With this, you just have one token, right? So if I have VE Arrow, I just locked up Arrow. So that's my only risk, is that the Arrow token is going to go down. But even if Arrow goes down in price, I'm still going to earn, you know, say it's like they're paying like 30%. You're still gonna earn 30% on a year. You might earn more, you know? So those are like the three main ways to just make money in crypto. This one is super underrated, in my opinion, versus liquidity pools. The main difference is that this is a liquid position, your liquidity pool, and typically with dividend style in crypto, you either have to lock up the tokens for a certain amount of time or stake them, something to that effect. So it's more illiquid, but you know, I don't mind purchasing a percentage of a decentralized exchange revenues. But yeah, now that I'm actually looking at this, I think I would do it opposite because of where we are in the market. Because things are down, I would do more cash flow than I would do more hodl. So I would do 40%. And 30% hodl. Right, so this would be 12K. And say it does, you know, again, just flat number, 30%. You know, that's like $4,000. Oh, it just did the math for me. That was wild. 4K. Right? So even while the hodl bag is just sitting there, and you're just kind of waiting for the market to go up, you can be earning this entire time. And then, you know, a portion of that could go into your hodl bag, or you could use it to buy more Bitcoin or buy more, you know, add more to your cash position. You know, you could do whatever you want with that cash flow once you got it. But that's what I would do. You know, yeah, that's what I would definitely do. And the reason why is because this 30% is going to be your cash position. I see Bitcoin as cash, not an investment, because it doesn't pay me. If it don't pay me, it can't be an investment. So Bitcoin is cash. So this would be your cash. And then you have your cash flow. And then you have this is essentially going to be your trade. So when the market goes crazy, what you're hoping is this 30%, right? So this would be not less. This would be like 9K. And let's say that 9K does let's say 600% on the money. So I don't think that's right. Let me just see. Oh yeah, it would be 54. So that's not bad. So I don't know where they got that from, but this would be 54K. Right, but you would have to wait for, you know, this hodl bag to appreciate to $54,000. But the main thing is that, you know, you still have Bitcoin in your portfolio, you have a cash position, and you're cash flowing while you're waiting for this to happen. And then as the price goes up, you're gonna ladder out and sell, you know, and maybe you don't get the whole 54, you get 50K, 45, but it's still gonna be more. This is still gonna be more than what you originally started with, plus the cash flow. So I don't know if that quite answered your question, but yeah, that's what I would do.
That was fire. Nah, I like that. Truth Seeking Lou also had a question. I can answer this one. With stacking pools, is that just another way of saying you're in multiple pools? Yes, stacking pools is another way of saying you're in multiple pools. And with the gas token, what's your thoughts on for every dollar I spend on crypto, I also spend a quarter on gas? Would that be a good strategy or a good waste? Um,
Uh, it's an
I
interesting
mean,
question.
it is interesting, right? Right. I mean, it depends on like how much activity you're doing on the DeFi space. Like, if you're kind of just holding, I don't think that's necessary. But like, if you're lending, then I would say maybe so. That might be a good idea. Or you're doing liquidity pools and like the cash flow type thing. That would be a good idea. It just maybe you can use that same strategy with the formulas of the percentage with the 30% cash flow and all that. Like you could apply that to how much you need to spend on gas fees, because if you're just like holding for the long term, you might not need to spend as much on gas fees, you know. So yeah. You want to add on to that, Jed? Zazar?
Yeah,
Okay.
no, that's cool. So I'm just showing you guys this just to show you kind of what VE Arrow is paying right now. So, you know, that could get you $40 a week, just under 5 grand, 2,000. And then you can do Velo, right? Um, just keep that up while we're talking. Um, and this is more of the dividend style kind of thing that I was talking about. But to answer the question, um, like spending for every dollar, you could also spend a quarter on gas. I don't know if that would necessarily be a good strategy. Um, the object is to pay less gas and to spend less money on gas. So, um, like if you're gonna be doing liquidity pools, and especially if you're on Ethereum mainnet versus being on something like Base or even Arbitrum or AVAX or whatever, if you're gonna be on mainnet, you want to make sure you actually have enough size to warrant being on mainnet and claiming the fees. You know what I mean? Because if you going like I just did that $2 little pool on Solana, it wouldn't have even been worth the gas to do that on Ethereum mainnet. You know what I mean? I would have spent more in gas maybe. Um so just kind of keep in mind like which network you're on as well when it comes to gas, but I don't necessarily know if for every dollar you want to spend a quarter on gas. Maybe less, maybe 10 cents. I would track it. I would track it if you're already in pools, multiple pools. I would track it and see how much you're actually spending, what percentage of it, is it per, it like you said, for every dollar, are you spending 10 cent, a quarter? And then I would do it based on there to see if, is 5% of my money going towards gas worth it? That's kind of more how I see it. I don't know if that answers the question though. It does. Okay. Okay, that's great to know. One thing I will add also just about Aerodrome and Velodrome, um, you get paid in whichever you get to pick which tokens you want to get paid in, right? So you vote on a pool, and based on that pool, if I vote on a WETH and CBTC pool, that's what I'm earning for the week. So you can also have the ability to earn in Bitcoin, in Ethereum, in Aave, or such and such coins, um, with Aerodrome or Velodrome. Yeah. and it's just a different way of investing versus liquidity pools, which is more liquid, and this is more of a permanent position. It's more of a purchase. It's more of a purchase. You can sell them. There are secondary markets, but you take like a 20% haircut, 30-40% haircut. So, but here's the thing: if you got Arrow at like 50 cents when it wicked down, let me actually show you guys. So, if you got Arrow, yeah, if you got Arrow down here, you know what I mean? Or even like everybody who got it down here is still up and they're still making money. So if you got it like below, let's say like 43 cents or so, you're still up double and you're earning. So if you were earning 30% at 42 cents, you would be earning at 87 cents, you would be earning like 70% on your money on basis. So that's also something to factor in.
And that's on that platform Autopilot that you had just pulled up.
On Airdrome or Velodrome, Autopilot is just a place where you can put your VNFT, either Airdrome or Velodrome, and it will automatically vote on the highest paying pool for you and sell it into stablecoin. So you can just claim USDC. You don't have to worry about anything else. So it's just some automation.
Okay, okay.
Yeah, I just use it because it shows you kind of what it's paying right now on spot. Like if you bought it right now, that's basically what it's going to pay you.
Okay.
Yeah. Yep. Anything else? I think that was all the questions. Okay. Well, if nobody has anything else, we can close it out.
Yep, I'm good as well. I'm good as well. This has been amazing. Man, thank y'all all for being here, spending your time and your energy towards this. And yeah, this is beautiful. It's a beautiful community that we're building with this. So yes, we will be getting this out on YouTube. Be patient with us on that. Uh, it will be the first video, so it might be some kinks to, but we're gonna get it out regardless. And I also have created a Google Drive, a Google Doc link of a lot of the links that we covered. So um, if you all are on Instagram, follow me. I'll put my Instagram in the chat real quick because we do have an Instagram group chat, and I could basically put like the PDF or something like that in the chat. So I'll just put my Instagram in. If you just follow me, I will add you, and yeah, that'll I think be a good way how I can get the Google Doc to everybody. So, because yeah, I got like 12 links on it at least. So, yeah, thank y'all very much. Okay, or you can if you're on Discord, you can just message me on Discord. Oh well, and I could get it to you on Discord if you don't want to IG. I understand. Yep, yep.
Yep. I want to thank all of you guys for coming out, and shout out to y'all for all sticking with it. You know, sticking with it. It's been a long time. A year is a long time, even though it feels fast. Especially with everything that happened in the market, like I said, this year. And you guys are still sticking with it. Still, and one thing I will kind of leave you with is, you know, there's 3 rules basically. Well, I have 2 mentors in crypto.
Oh no, you cut out when you
What was that?
said you have two mentors. You cut out when you say you had two mentors.
Can you hear me?
I can hear you.
Okay, cool. Yeah, so one of them is Chicago Crypto Bully, as you all know, and then the other is Captain Rational, Noah Sedman. He has 3 rules, right? First rule, own more assets. That is quite literally the only thing you have to do to win. If you don't want to be a peasant, you don't want your grandchildren, great grandchildren, and so on and so forth to be peasants, then all you have to do is own more assets. That's the only thing that matters in this world. At the end of the day, when they went off there, you name whoever it is they went after the sovereign wealth. They went after the gold. They went after what they owned, right? Whether it was goats, sheep, gold, land, it was assets that they went after. So you got to own more assets. That's the first rule. The second rule is know when to not buy assets, right? You kind of want to buy them when they're distressed or underpriced, undervalued, right? Third rule, fuck you, pay me, right? And that's kind of, comes down to, like I said, investing to me is when I get paid. If I don't get paid, then it's not an investment. It's just a trade or it's a cash position. Bitcoin is not an investment for me. It's a cash position. Something I hold, I can borrow against it. It's just collateral cash. It's going to keep going up. Great. But it's not an investment. Gold is not an investment for me, right? That's also another reason why I don't understand why people point them against each other. But anyway, the fourth rule, he just added this, is don't neglect the cash position. And that in this time is the most important. So many people see the dip, but have nothing to buy the dip with because they bought every other dip and used all their cash. They don't have any cash flow because they neglected rule number 3. Fuck you, pay me. Okay? Because at the end of the day, it all goes back to rule number 1, and that's buy more assets. And that's the most important thing for everyone to do. And if you've been here and you keep buying Bitcoin, then that's what you're doing. You're buying more assets. So you should be proud of yourself. Keep going. And with that, that's kind of all I have for you guys. Thank you all for coming. Shout out to Kwaku putting this together, bringing me in. Shout out to all you guys for coming out and sticking with it.
Yes, yes. And last question, I see Shell. Are you when you said, is there a way for us to rewatch the last meeting? If you're referring to the one we had last month, I could. I'm not sure, but we can. I'll talk with and see if we could get that recording. But definitely, this one is recorded, as y'all see. So yeah, I'm not sure, but if it is, We'll put it on the YouTube. You know what I'm saying? But definitely for sure, this one is getting uploaded. So
Yeah,
y'all be able to
yeah.
watch it.
This one
Hmm.
we definitely have almost all of it. The other one, I will look in the huddle thing. I'll be honest with you guys, that was like my first time kind of actually hosting a full huddle uh group meeting thing. So I was having a bit of technical difficulties that last time. But I would definitely check to see if that recording is there.
Cool. All right. On that note, much love to everybody.